Welcome to the HC Insider podcast. I'm Paul Chapman. Today I'm joined by David Fernandez, Managing Director at Goldman Sachs over renewable power. David, thanks for joining.
Thank you, Paul. Thank you for having me.
I guess you spent much of your career in renewables, particularly in solar. This current decade, which we're just embarking on, has been characterized by some as the solar decade. Is that the case? And if so, why?
Yes, Paul. Indeed, I do believe that is the case. But before we get into solar, let me give a little bit of introduction into renewables. It is clear that the world is going through a decarbonization process that could be accelerated by COVID. We don't know if COVID, what impact it's going to have at this point. But as I said, it could accelerate that decarbonization process. And that is why, to be honest, renewable deployment has been increasing worldwide in a massive way. Among renewables, solar is well positioned to be the winner. I truly believe so. And I just give you, some reasons that why, I believe that solar is well positioned. First of all, there's very small variability in returns compared to other renewable sources. Also, there's no moving parts or minimum moving parts. And this is important since OPEX is having a bigger impact to LCOE, given that the CapEx optimization over the last decade or so has been tremendous. Another reason is that it's visually appealing. To be honest, people like to see solar on their roofs. There's even advances on, roof tiles with solar integrated in them. And also, it can be deployed anywhere. This is a really, really important fact as well. But Paul, if you allow me to, I would like to clarify some points about solar, some myths, that they've been around. Is that solar is not just for the Southern California, where there's a lot of sun hours and sun is really strong. Solar power also works in cloudy places or places that the solar resource is not as good. As an example, the biggest solar market for a number of years was Germany. Also, there's been quite a bit of solar deployment in places like Ontario, Canada, and Massachusetts. And neither of those three places are known by having a lot of sun and the radiation being strong. As a matter of fact, solar modules really they like high radiation for sure, but also they like cooler temperatures. High temperatures but makes the cell, the module not as efficient. And also solar modules enjoy having snow around them on the ground. They boost the production for of those modules due to the reflection, especially with the new technology modules that we have out there in the market. I'm talking about bifacial modules. So certainly we find a lot of solar deployment in places like Maine, places like Colorado, where they have cooler temperatures, where they have the snow around them, or places like Canada, Germany, UK, where the solar radiation is not as good as places like Southern California.
So you've got the argument of visually appealing, perhaps less impactful than big wind farms throughout the landscape. I think the most crucial things you pointed to there, and again, it was a surprise to me to hear that solar PV works better in Colorado than it does in the desert because of just temperatures. But the big things you mentioned there are there's no moving parts, a more predictable rate of return. Can you talk on both those things and how that then interplays into them as assets and particularly how that impacts the investor community?
Yeah, so certainly. So it is true. You hit it. You hit it that center. Wind. If we compare wind with solar, there is a lot more predictability in the cash flows in solar. First of all, we start with the resource. Wind resource. You can have a year where the resource is 30% up, 30% down. So you can have those swings. Where in solar is a fraction of those swings from the resources standpoint, but also CapEx. But also OPEX. Apologies. From the OPEX perspective, you don't have this huge devices on the ground that that you have to have people at all times, and it's just there are things that break because there are a lot of moving parts. With solar, you have minimum amount of moving parts. The contracts that the industry has to preventive and corrective maintenance, they're a lot more narrow than wind and other sources of energy, and therefore is the predictability is there, and that is what the investor community wants. They don't want swings, they don't want surprises on a yearly basis. So that's why we think that solar has a leg in front of other renewable sources.
And I guess we'll come on to the fact that no moving parts and actually you can automate the repair of these facilities potentially down in the future. But before we get there, it has been, I guess, in my career at Human Capital, we've had kind of stops and starts on solar. I guess all the conferences we've met at, there's been optimism around it, and the big challenge has always been, I guess, around pricing of the units themselves. What's going on there that I guess supports that idea of a solar decade?
So you made a good point, right? We have had lumpiness within the marketplace of just not also pricing and feasibility of deployment and whatnot, but also the question of is solar going to compete with other renewable sources? Well, the reality, we're now here. We're at that point. In some parts of the world, solar doesn't need subsidies. With high radiation, you have places in the world that solar is competing without subsidies with other sources of energy. So it is now proven, and we're at that point where solar it can work, and we have a path into the industry to further reduce the LCOE in places where maybe the solar resource is not as good, to make it also a viable solution without subsidies. So we're now at that point, I think.
And the LCOE?
Yeah, the leveraged cost of energy. With that electron that you flew through the grid, how much it's costing you versus other sources of energy.
This is the year, I guess, we expect that solar overtakes wind on a global basis.
That is correct. In 2020, we're expecting to overpass solar overpassing wind. I mean, solar has been the fastest renewable source since 2017, and it's expected that from 2017 to 2023, more than double the capacity of solar is installed versus the next renewable source. So certainly the numbers there, they look really good. If we look in the States, in 2010, at the end of 2010, there was 2.5 gigawatts of capacity installed. Fast forward 9 years at the end of 2019, that 2.5 transferred into 76 gigawatts. So basically, that's approximately 3,000% growth in the market. So it has been an incredible, remarkable growth of solar in the US and worldwide too. But as I said, it's expected that for the years to come, installing in the US roughly about 20 gigawatts for the next 3 to 4 years. That's about, in market size, $30 billion on a runway basis. So it's a very important market and something that we really have to consider.
We're talking about solar, but what does that actually mean with regards to scale, implementation? Are we talking utility scale? Are we talking solar on rooftops, or all of the above? What actually does the industry look like right now, and what are the trends there?
Yes, so that's a great question, Paul. Let me first explain the three main segments that we look at. The three segments are residential, middle market, and large utility scale. First of all, middle market is not a widely spread market term. It's something that we came up with. And the reason is that a lot of people talk about C&I, DG, what is really distributed generation, what is C&I, what's community solar fitting into that. So we just put this middle market term. And basically what the middle market is assets that are not large utility and are not residential. They're typically interconnected to voltage below 69 kV, and they're between a few hundred kilowatts to 40, 50 megawatts of size. The size of the segments, I have to say that, especially in the middle market and large utility, have changed over time. When I started in this industry, people talked about 10 megawatt project and that it was a large utility project, and they were just a few in the world. Nowadays, people talk about a gigawatt, 2 gigawatt, solar arrays. So definitely the utility scale, the specific size for that segment has changed over time. But out of the three segments, you're asking a very good question. Which one is going to win? Or is there going to be one? Is it going to be all three of them? I think all three of them will play a big role in the industry. There will be residential for sure. We're seeing cities in the U.S. where it's mandatory to put residential solar in new homes, and also warehouses, new warehouses, and whatnot. So residential will continue to play a role in the market. There will be large-scale utility, plants for sure. But I think that middle market solar is positioned as the most attractive asset class. Just to make sure that you understand, the off-takers in the middle market are corporate off-takers, are muni, co-ops, schools, university, government off-takers, community solar. So all those, are within what we call the mid-market. And the reasons why I think that they have, an advantage over the other two segments, especially large utility, is the following. The same way, that you will see the solar being deployed in the largest scale, which is going to happen, but there are going to be challenges to do that. So people don't want to play in solar. They're going to see where the capital markets, they're going to see where they have the least amount of risks, right? Large utility challenges are definitely something that investors are paying really close look at. We have grid dependency in a large scale utility. So basically, there has to be capacity in that line for the project to go. They are getting tougher. Those utility scale projects are getting tougher to finance. Why? The permitting is longer. There's a longer time for permitting and construction, which makes quite a bit of more risky kind of asset class than solar mid market, where the construction is faster and it doesn't depend on as much on grid availability. But also from the the new tariffs and the executive order that was just in place or announced to prohibit certain equipment above 69 kV line, certain electrical equipment for certain countries, fire risk that we've seen in California, the curtailment risk that has been quite in everybody's mind, especially in California as well, and things like node risk, basis risk. The PPAs are getting shorter. All this, at the end of the day, how the investor sees it is that it's more exposure in the front end, but especially on the back end when the contracts, the PPAs run out. We don't see that in the middle market as much.
You're much more connected, I guess, to the meet, or you're closer to the edge, much more connected to the end user. You don't face these massive. It's a much less risky proposition. And as you say, the investor community is less willing to provide the financing to these huge utility scale projects.
Exactly. But that's very well said. I mean, at the end of the day, you have a take or pay contract. Whatever you produce, you deliver, and there's not that many people in between that can affect your revenue stack. So certainly that is huge and really important for the middle market. But there's another fact, Paul, and it is that the middle market can be deployed almost anywhere. And to me, if we think about if we think about a grid efficiency in the grid. Having a large facility in the middle of the desert and wheel all that power to the load pockets, to me, it's just inefficient versus having the generation close to the load. So you can, in the middle market, as I said, anywhere from 400 kW or a couple hundred even kW to 40 or 50 megawatts. You can deploy it from, homes on top of or roofs on top of buildings in Manhattan to like airports, parking lots of airports, to parking lots of offices, building offices, and everything else, and small pieces of land. That to me makes more sense because that distributed generation will be better to better. You will be able to handle it better, and also is more efficient.
And I think that's fascinating because that's come up time and time again, just in the podcast so far, is that you've got this disruption going on, and actually it's a lot easier now because of the smaller scale for organizations to circumvent traditional established, governmental entities or the dominant players, in this case, large transmission lines, and just put stuff closer to customers. And actually that enables completely different types of entities to do that. It doesn't necessarily have to be established utility players that are participating in that middle market. It could be anyone, because as you say, the technology itself is relatively simple.
For sure.
I guess you're an investment bank in doing it, right?
That becomes a lot more of a liquid market and a transactional between two entities, which it just becomes easier and less risks. Also, the cost to deploy that asset, it becomes a lot faster and a lot cheaper than it would be a larger scale utility kind of asset, which you have to go through permittings, through a bunch of hoops, and at the end having a lot of different stakeholders until that asset gets COD, commercial operation date.
So I really want to get on to sort of participants, because you do have an entire array engaged at the moment, whether it's around managing the risks from basis and nodal risks through to various investors, developers, et cetera, et cetera. Before we get there, there's a couple of other, I guess, one of the big enablers of and connected industry to the solar decade is going to be storage, right? Batteries. Yes. Can you talk a little bit how that really does unlock the power of solar and guess your comments there?
Sure, certainly. So solar is non-dispatchable energy. At the end of the day, you can you can produce solar energy when the sun is shining, right? But at 5 o'clock in the morning, you're not going to produce solar energy, right? And there's also intermittent effects because of cloud coverage and whatnot. So you don't have a steady kind of like a perfect production curve on a daily basis. So how do we fix this? How do we make renewable energy, in particular solar, a dispatchable energy? Well, we make it only through battery storage. So the battery storage is going to be the enable of creating, all these objectives that different states have of going renewables, 100% renewables and whatnot. There's no other way to do it without, just the battery storage. Battery storage has some challenges, mainly on the price point, and from the investor side of it, the unclear financial model. How do we make money? How is this, attribute or additionality to the solar plant going to help me to make money? Is that going to be accretive to my returns or not? So from the investor side of it, it has to be a little bit more clear how the investor makes money. Is that through capacity payments? Is that through the frequency regulation? Is that through shifting of the generation from the certain times that you're going to get more revenue? So certainly that we have a lot to work on that front, but also the price. The good news is that just last year, there was a reduction in LCOE for the battery storage of 35%. There's been amazing the work that has been done to reduce LCOE for battery storage, and will continue to reduce. I'm a firm believer of that. And right now we're seeing the battery storage works, but in no time it's definitely going to work because of the price point is going to be where it has to be.
So we've got this variety of scale at which solar is being deployed. You've got this connection with batteries. It certainly sounds from this discussion that kind of middle market has got tremendous growth opportunity. How do you think the participants currently engaged will fare? Do we expect to see, talk about batteries, do we expect to see Tesla turn up and start getting a dominant share of the solar market? How do you think the competitive landscape out there will, I guess, drive the participants?
Well, I mean, the participants. I think that the participants that we have right now, in the solar space, the energy companies, the regulated and unregulated, the commodity traders, the IPPs, bank, insurance companies, utilities, and of course the OEMs, right? The original equipment manufacturers. All of those are going to have a role in the next years in a greater or lesser, the kind of level. But everybody, I believe that everybody's going to have a role in the market. I'm not sure about a winner or a loser. What I can tell you is that the winner, in my mind, has to be a company that first understands that the energy transition won't happen without digitalization transformation. I believe that we're going to be, all of us, you, myself, everybody's going to be a consumer and a generator of electrons through the electrification of the transportation sector. You're going to charge your vehicle in your house, and you're going to go to work, and you're going to probably sell some energy because the power prices at that very moment are high. And you're going to be able to do energy arbitrage at a micro level. So all that, I mean, how is it going to affect the install generation or any generation that you want to install? Well, through machine learning, I think remote monitoring, remote plant management, and dispatchability of energy sources will be the key to champion the energy transition. Whoever understands that is going to have a leg in front of everybody. And let me explain those three because factors, because they're critical. Machine learning. So anticipating new behaviors and adapting quickly, making sure that you have the data that supports, how this new way of consuming and producing energy at a micro and a macro level happens, to be able to adapt quickly, and that is through data, and be able to understand this shift that is happening in the energy or this transition in the energy world. The remote management. Well, I talked to you about the difference between middle market. Another big difference between middle market and large utility scale, is the middle market typically that they're not people. There's not man sites, how we call it. We don't have people on site be able to attend, any type of issues that may happen and restart the site if it comes offline. And the utility, you do have people. You have an O&M building, and people react quickly. What needs to happen is that we as asset owners can remotely restart, the solar plant, the solar array, be able to do things to the inverter, which is the main electrical component in the site that transforms the DC to AC, so it can be transport. They be able to get into the engine of the inverter and do tweaks from summer to winter and whatnot to optimize the plant. And also drive the cost of the OPEX, drive it down, because you don't have to have people and drive it to the site and spend all that money that is just inefficient in the OPEX kind of a bucket. Also, dispatchability of renewables. And this goes back to my previous point. Dispatchability is batteries, making sure that we change a renewable source into a dispatchable source. And that has to be through batteries. So if a stakeholder in the marketplace thinks about these three things, I think that is going to capture, or is going to capitalize, quite a bit of wins in the marketplace.
Fascinating. And I think that's also, there's so much, I guess, one of the other enablers that needs to happen in some extent is going to be, I guess, investment in the energy grid, at this scale and level as well. There's a significant amount of, I assume, risk management that's going to be needed by organizations as well from a pricing standpoint, as we go through this transition.
No doubt. I mean, right now, the risk management is in everybody's kind of hit at the moment. I mean, there's the right now we're in a world where the PPAs are getting shorter and shorter. There's the regulated markets. They're trading hedges in solar, short term view on RECs. I mean, at the end of the day, if you think about it, the common risk is that we're moving into a world where we have certainty in the beginning years. If we talk about RECs, it could be only 3 years. People don't sign contracts for more than 3 years. But what is it going to happen on year 4, 5, and so on? Especially in an asset class where we continue increasing the longevity of these assets through better designs, through better technology. We're moving into 35, 45-year investment vehicle, and you're only covering or have certainty for the first 3. That is just quite a bit of risk. So I completely agree with you that there's risk management is something that people should be aware of when they get into the market.
And opportunity as well for those, I guess, the commodity traders you mentioned earlier on. One big element of renewables in general, and certainly the solar markets, has been governmental support, and also governmental, hindrance, so in the form of taxes and tariffs. I'm just talking generically around the world. How much do you think that will play a part in the solar decade, or is it coming anyway, and we've essentially moved beyond that?
Let me say first that solar energy is in our lives, and it's in our lives to stay. Today solar is competitive, as I said before. Solar is competitive without subsidies in some areas of the planet. Subsidies, tariffs, executive orders, and whatnot will speed up or slow down solar penetration in the world, but it won't stop it.
When you look back 10 years ago, 2010, to compare to 2020, in layman's terms, how much more efficient, more effective has the photovoltaic cell become? And what can we expect in the next 10 years?
That's a great question also. When I started in the solar industry specifically, we were talking about efficiencies of 6-7% at the module level. Right now we're on the low 20s with some technologies higher than that, but certainly has been an incredible move in the efficiency ladder. Also, the efficiency is one portion of it, but the other portion is the cost, which the modules, they have decreased the cost, incredible. At the end of the day, people talk about, how efficient is this module, how efficient is that module, and they try to sell the modules on efficiency level. But the reality is, I don't care about efficiency. I just care about LCOE. What is the price of that electron that it's going to cost me? I might have to put more modules on a site because the modules are not efficient. But certainly we sell kilowatt hours. We don't sell efficiency, right? As an asset owner. But you're right. Efficiency is important. Why? Because in some places where the land is priced, it's expensive. You want to make sure you condense the most amount of kilowatt hours into a smaller piece of land. So it does have an impact. But as I said, always let's talk about LCOE. And on the price side of it, modules used to cost, prior to 2010, I used to pay, $4.50, where today you can buy modules outside of the United States for 20 cents. So certainly the OEMs, the module manufacturers have done an incredible work, not just in the efficiency level, but also reduce the price of those modules to where we have today. Now, what do we have from now? What is going to happen from now on? Are we stuck in the 20% or 20-ish% efficiency? I don't think so. There are a lot of companies today that they're looking into devices to increase that efficiency of the modules outside of the module itself. As I told you before, temperature affects the efficiency of the module. So the cell could be very efficient, but then if it's high temperature in the Imperial Valley down in Southern California, then the cell is not gonna be as efficient. So they're studying. There are a lot of companies out there with quite a bit of capital behind them to study in devices to increase that efficiency. That's going to be a game changer. There's some people, believe it or not, you could have different perspective, but there's people talking about 60% boost the efficiency of the modules to 60%. Imagine if we go from 20 to 60%, we can retrofit all those 76 gigawatts of installed capacity out there, and we increase that massively that nobody had in their financial models. That's going to be a game changer.
Yeah. Is the solar decade, is it global, or are we just talking for developed nations?
No, it is global. It is global. I really believe that it's global because of several reasons, and it probably will take another hour or so to explain that. But solar has to get to a point. If we talk to the consumer and consumer, let's say, you as a homeowner, it has to get to where you go to a store and you buy, your module kit and you just install it really quickly and move on, right? You can, and if you get to that point, which we're there, you could actually deploy, solar in the middle of Tibet. And have your house isolated from the grid, being powered by solar, right, with batteries. So the solar is a worldwide movement. We're seeing a huge demand of solar in Europe in the recent years. Just as Spain came out last year with a solar carve-out mandate for the next 10 years, very aggressive. We're seeing the UK and the northern European countries kind of following that. Eastern Europe, the same way. Asia, in Japan, China, of course, the biggest market out there. So you see solar being deployed everywhere. And I think it's just going to be the solar decade in a worldwide basis.
Well, David, it's been an absolute pleasure. Typically, we meet around this time at the SPI conference in Vegas. But given a global pandemic, that's certainly not happening, at least my side. So I'll miss seeing you at that.
Yeah, thank you, Paul. Thank you for having me. It's been a great pleasure, and definitely we have to take a rain check and see each other soon.
Yeah, exactly. Well, thanks again. It has been an absolutely fascinating discussion. It is I think it plays into a number of, I guess the theme that it really is of 2020 as regards the energy world, which is one of transition. And once again, those words of digitization, automation, data, are behind those organizations that are going to be at the forefront of that transition. So it was fascinating to get your insight, and thanks for your time.
Thank you.
Thank you for listening to the HC Insider podcast. To find out more about HC, go to hcinsider.global, where there's more news and content focused on the commodities markets.